Welcome to the Explainer. Today, we're diving into a really fascinating analysis from PhilStockWorld. It's all about a hidden recession signal that the market just might be ignoring, and it comes from a super creative solution cooked up during a total data blackout. So let's start with a bit of a puzzle. How on earth are you supposed to track the health of an economy when the very government agencies that publish all the important data have just, well, shut down? Well, back in late 2025, this wasn't some hypothetical question. According to our source material, a pretty long government shutdown meant that all the official U.S. economic reports, jobs numbers, consumer sentiment, the works, they just weren't being released. Investors were basically flying blind in a hurricane, trying to navigate a wild market without a map.
So what do you do? In this fog of uncertainty, how could anyone possibly get a clue about what was really going on with the economy? Was there any way to see what was coming?
Well, this is where it gets really interesting. The source article we're looking at proposes this novel solution, something they call the shadow dashboard. Okay, so let's get into this. The idea here is it's simple, but it's absolutely brilliant. The economies of allied nations often move in lockstep with the US, right? But they just happen to publish their data a little bit earlier. So you can use their reports to make a really good, educated guess about what the US data is going to show whenever it finally comes out. And this is where you can really see the logic in action. Canadian unemployment numbers could give you a heads up on the US jobs report. Weakness in German manufacturing, that might be a warning sign for US layoffs. It's kind of like trying to predict the weather in New York by looking at the storm clouds that are already forming over Chicago. So, using all this proxy data, the dashboard started making some pretty bold predictions. It was forecasting that US job growth could actually turn negative. But one prediction stood out from all the rest. It was this forecast that the Consumer Expectations Index would drop below the critical level of 50. Trust me, you're going to want to remember that number. And this new dashboard didn't have to wait very long at all for its first big real-world test. Okay, so Thursday morning rolls around and boom, this number hits the wires. That's the total number of layoffs announced in the US for the month of October. And look, this wasn't just some big number. This was a devastating report. The worst October for job cuts in over 2 decades. And here's the kicker. The weakness was showing up in the exact same sectors like warehousing and tech that the dashboard's foreign proxy data predicted would get hit. And this just perfectly captures the market's initial confusion. At first, the market rallied on the bad news because, traders thought it would force the Fed to cut interest rates. But just as the source article called it, that little rally was doomed to fail once traders realized the severity of it all, that this wasn't just a number, it was a sign of real economic demand being destroyed. And then came Friday morning. And with it, what you could call the smoking gun in this whole detective story. The official consumer sentiment data was finally released, even with the shutdown going on. And that most important component, the expectations index, it landed at exactly 49.0, right smack in the middle of the shadow dashboard's predicted range. I mean, wow. So what is this number anyway? What are we even talking about? Well, it's a direct measure of how confident people are about the future, about their finances and job security 6 months down the road. And the shadow dashboard, using data from halfway across the world, had basically nailed it. And this is the crucial point right here. According to the source, we're not just talking about another random data point. For over 50 years, every single time this index has dropped below 50, a recession has followed. It's been a flawless indicator, and now it was triggered. So you'd think the market would absolutely freak out on news like that, right? A perfect recession indicator just went off. Well, this is where the story takes let's just say, a very bizarre twist. At first, things went as you'd expect, a brutal sell-off right out of the gate. But then, in the afternoon, the market stages this just shocking reversal. I mean, it clawed back everything it lost and actually closed higher for the day. And get this, it happened even after rumors of a government deal to end the shutdown fell apart. Makes no sense, right? So what on earth was going on? Well, the source explains this wasn't about good news. No, this was purely mechanical. Think of it like a rescue mission run by computers. These trading algorithms were just programmed to buy stocks and defend this one important technical line on the chart, the 50-day moving average, no matter how terrible the economic data was. But if you peel back the layers of that weird rally, the story gets even stranger. See, the big AI and tech stocks, the ones that have been carrying the market all year, they were actually getting hammered. The source calls it AI fatigue, and it just goes to show you how much turmoil was hiding right under the surface. And all of this, it sets up this epic standoff, which is really what this whole analysis is all about. So on one side, you've got the fundamentals, reality, and they are screaming that a recession is on its way. You've got layoffs at a 22-year high, and that historically perfect recession indicator flashing bright red. But on the other side, you have the market's technical patterns, its habits, just stubbornly holding the line, buying the dip, simply because a line on a chart told them to. And that's where the analysis from PhilStockWorld leaves us. With this incredibly powerful question, you've got the real-world data saying sell, but the market's programming is saying buy. It's this dangerous disconnect between economic reality and how the market is behaving. And when that happens, eventually something has to give. The only question is, what?